Okay, ladies and gentlemen, it is September 1st, 2022. It is Thursday. Happy Thursday to all. It is just after noon here in New York City. First off, let's go over the changes I've made to my portfolio so that you guys are up to date. I did take some profits on our spreads that we had. The triple Q that I had, the triple Q put spreads I had was about half of what was at play in my spec account. So in my speculative account, about 8% of it was invested in different spreads, and we started building those spreads in June. You guys can go back and look at all those spreads that I built. Out of that 8%, about half of that was in QQQ, and I saw that it doubled today. So I couldn't resist. I took profits on my QQQ puts so that everything is paid for now. And I also took profits on my IWM November and December spreads. As you can see on my screen, QQQ, when we go to November, see there's no signs. It means it's gone. I have no more positions. Okay, so QQQ gone. I made about double on that. And then IWM also, I have no more positions anymore. You can take a look, see October, November, you don't see those tags anymore. I'm out. I made about 50% on the IWM spread. So, with the hedges that I did, remember in June, July, we did the Baidu hedges. We went long on Baidu on that pop. That paid for the Dow Jones and the Euro ETF FEZ spreads. So with that, with the IWM being taken and the QQQ spreads paying for everything, not only did I get my principal back, but I also made a very nice rate of return guaranteed in cash so far. Okay, and everything else is just riding free. We'll see what happens. I am willing to get back into QQQ puts when the S&P 500 gets to 4120 or so. All right, if we see because we are in options expiration. Okay, this is like I said from last week's video, this is this upcoming September OPEX. It is the largest options expiration in history for the S&P 500. All right. We have a good chance of going up, and I think there's this trend line. Okay, now I'm not you guys know that I'm not a big fan of using crayon lines on a chart, but I'm willing to use something until it stops working. This trend line on the S&P 500 seems to work. Okay, yes, it overshot it here, but we saw I think this is because it was such low volume. Look at the volume. It was such a low volume time, low liquidity time, that I think it just got pushed over. Because also too, remember here we saw a lot of call chasing in tech stocks. Remember that? So I think that kind of pushed it over, and we saw the institution response a little bit muted, as a lot of institutional traders are on vacation. All right, but this line seems to work. All right, right here especially, we saw a lot of hedging demand come back into the market around here. All right, line seems to work. So again, if during this OPEX we see puts getting sold off, just from before, when everybody sells puts, the market maker has to buy those puts, which is a bearish position for the market maker. Market maker has to buy some of the underlying in order to even out his books. All right, and if that happens, we might touch that 4120, 4140 zone. I'm willing to re-enter those triple Q puts when the S&P 500 gets right there. Okay, so I'm not trying to predict the future. I'm not saying it's going to happen 100%. I'm not saying that. I'm just trying to anticipate the next few moves if we get them. Okay, just in case if we do, I want to have a plan in place, so I'm not panicking and scrambling and making a plan on the spot. I already have a plan in mind. Okay, then I can act clearly without emotion at that point. But this right here is going to be where I short, and I bet you when it does get there, a lot of retail, Twitter, the media, they're probably going to say, oh, bear market's over. This was just a dip, buy the dip. They're probably going to say that around here. Okay. So yes, it will be scary to buy puts at this point, but I think it'll pay out. And you know, and also too, I will only buy puts at this level if our liquidity signals, which is that, you know, New York high low line, you know, I go over this with you guys almost every day. As long as our New York high low line, all right, doesn't curl up, and as long as our junk bonds AUD line also doesn't curl up and show liquidity entering the market, that is when I short here. So if all our liquidity signals are still pointing down and we get to this point just because of options rebalancing, boom, that's going to be where I re-enter my short right here. Okay. As far as my other spreads haven't changed. I still have DIA, the DIA spread. Okay, I still have it. October 21st, I still have them. All right, I'm gonna let these run for a bit. All right, EWT, December's 49.40. Ooh, the 49s are almost in the money now. Some nice gains in there, although they are unrealized at the moment. November, FEZ spreads. Actually, these I only have very few spreads. Remember, I got rid of these 27 short puts when they got to 25 or so. That was the last order, actually, it looks like. So I got rid of most of these. So I still have a few spreads, but most of my puts are running naked, the 32 puts for November. All right, so I still have those. What else do I still have? Oh, I still have our, UVXY call spreads as well. All right, 14.24, 15.20, nothing has changed. Oh, by the way, HUT. I did get rid of my covered calls. My covered calls, I got rid of them at 18. I sold them for 26. Remember, those went all the way up to 60. Oof, that was scary to hold on to them, but luckily, patience paid off, and I was able to make 30% of max profit on those. So I can't complain. All right. All the spreads that I just went over, you know, the DIA, EWT, FEZ, UVXY, these are all paid for and more. Oh, actually, too, I also have the USO, the oil spreads. Remember, I said I was going to buy if it hits that 90 mark on the December contract. So it did. I'm underwater on these. I put this up on the Discord, 76.81. Very small. This was like 0.8% of my portfolio. So I guess this is also paid for too with everything that we did today. We'll see if this pans out or not. We'll see. Okay, we shall see. So those are my current positions right now. I wanted to share that with you because there's been a lot of changes. So that's that. And at the very end, I'll go over my future plans for all of this one more time at the end. Okay. As far as, you know, some next plays that I'm looking at, you know, one of the things, you know, that's in the news right now is the yen. Okay. I don't know what is going on. And I've been saying this for like a couple of months. I still think that one of the risks that nobody's talking about right now is risks from the Bank of Japan. Right now, the yen is at around 140 yen per dollar, and we haven't seen these levels since the 90s. Okay, since 98. All right, we haven't seen this since 98. All right, I think the Bank of Japan has literally lost control of the yen. They have literally lost control of this. All right, it's depreciating way too quickly because, again, the Bank of Japan is the only central bank outside of China that is still dovish. All right, they're the only ones still maintaining low interest rates. Well, China's cutting right now because they have some systemic issues, but Japan, though, they're still maintaining a very loose monetary policy. So far, it looks like Japanese CapEx, capital spending, is still going up, and businesses are able to withstand these rising costs. But the Japanese economic model is like this. They are an exporting nation, but they don't have a lot of natural resources. So they import a lot of natural resources and they export a lot of final goods. Okay, so whenever the Japanese yen goes down like this, okay, so USD JPY, when it's going up, it means the Japanese yen is coming down in value because you have more Japanese yen that you need to buy $1. Okay, so when this chart is going up, it means the Japanese yen is depreciating. So whenever the Japanese yen is depreciating this much, costs are going to go up in Japan. Their inflation is ticking up. So what if, and they're already right now politically over there in their domestic politics, people are already demanding that the government do something about this inflation over there. Okay? What do you think is going to happen when that pressure is too much and the Bank of Japan has to start tightening? I don't think the market has factored that in yet. Okay, I don't think the market has factored that in yet, so I'm going to keep watching this and I'm going to set some alerts on this. I think if the Japanese yen breaks down below like this mid 120s or so, that might spook the market a little bit. Okay, most likely for that to happen, we're going to have to see something from the Bank of Japan. Sometimes the Bank of Japan is like that. They like to throw these curveballs at the market. And if this, again, if this falls, we lose that mid 120s. We could see a round of volatility come back into the market. Okay. You know, I said this back earlier in November of 2021, that this upcoming year, 2022, was going to be the year of the quant funds. Okay. You know, the markets before, like, you know, 2017, 2020, that was the year of the momentum algorithms. All right. Now, this year is the age of the quant funds. Quant funds have underperformed the market for the past decade. Okay, and I think this year, they're, you know, at the end of the year, we're going to find out that they probably killed it this year. Okay, and I think quant funds are firmly in charge of the market right now. If you look at certain ratios, that's why our ratio charts work so well. That's why our data indicators work so well, because I think a lot of the quant funds are using the same data we're using. All right. Well, I know they're using the same data we're using. I know that for a fact through, you know, friends and contacts of mine from when I was in the business. So, you know, quantitatively speaking, whenever the Japanese yen appreciates a lot, that is a risk-off signal quantitatively. Okay, so if this drops, it means the Japanese yen is going up. It's appreciating. Quantitative funds are going to do risk off, because generally when the Japanese yen appreciates, it means a lot of Asian investors or Japanese investors are pulling their money out of international markets and parking it back into Japan. All right. Japan is one of those countries that invests a lot of money overseas. It's like a very, very large savings account. All right. It's a very liquid savings account. Pretty much they invest a lot of that money overseas, and then whenever the Japanese yen appreciates, they bring it back, all right, and buy more yen. That's why it appreciates. So again, if we see this chart drop, that means Japanese yen appreciates. If it appreciates, that might be a risk-off signal for quant funds, okay? So keep that in mind. I'm going to be watching this like a hawk. China had some, let's see here, they have some lockdowns. I believe it was the Chengdu province. There's about 21 million people that live there. Apparently, they did a lockdown there. And then their tech hub, which is Shenzhen region, they also put some COVID restrictions too. Although it wasn't a complete lockdown, they did put some COVID restrictions. Also to, you know, Shanghai, there was some economic data that came out for the Shanghai province area, and their economy is not recovering as quickly, even though their lockdowns were lifted on June 1st. So we're seeing the Australian dollar sell off a bit here. All right. Again, whenever bad news comes out of China, usually the Australian dollar moves, because a lot of the industrial metal demand from China, a lot of that metals gets bought from Australian markets. So whenever industrial output is set to slow down in China, we see a sell off in the Australian dollar. And this is used as our lie detector for China. All right. China's just not doing very well. All right. They have some issues with their real estate, and now they're having, now all these shutdowns and everything. So that should be interesting. We'll see what happens and what comes out of this. But for those of you who are in Chinese stocks, you may want to keep a close eye on that Australian dollar, just in case if we see further sell-off. If we see this really break out to the downside and make new lows for the year, I think that means that there's some real systemic issues in China. Okay, I mean, we already knew there were systemic issues, but they're probably a lot worse than what we originally thought. If this keeps just going down, that could put some pressure on metals. XME might get pressured. If XME gets pressured, here's the reason why I bring this up. If XME gets pressured, we might see our uranium plays come back down to planet Earth and be in our buy zone again. So, this might be an opportunity for us. Okay, this might be an opportunity for us. DNN, UUUU, CCJ. I mean, these are all uranium names that are pulling back right now. CCJ not so much. I don't know why CCJ is not pulling back as much, but the URA ETF is down about 5%. And then we have bigger declines, and the ones that we want is UUUU. And also DNN is a good one too. But DNN, I'm going to play options leaps, and UUUU, I'm going to be buying shares. Okay, I'm going to be buying shares with this. All right, so there's that. So that's how China and the Australian dollar could affect our plans here. So we might get what we want and see lower prices. All right. Other news. We saw the U.S. order NVIDIA and AMD to stop sales of AI chips to China. And of course, the market is not taking that favorably. Look at NVIDIA down almost 12% today. AMD down 7% today. All right. This is putting a damper on STOXX, which is the semiconductor index. So we're seeing a lot of semiconductor stocks getting sold off in sympathy with this move. All right. We've been talking about Intel for a bit. All right. I haven't added it to my plan yet just because I do think there's a lot more pain ahead. But it's starting to look like Intel may be going to the low 20s, like 27, 28 or so. I may start nibbling some Intel shares around here, 27 or so, right here. I think the value is very compelling at these levels, 27, 88 or so, 27 to 28 zone. Okay, so I might add this to the plan, guys. All right, Intel 27, 28. It's a buy for me. All right, I will be buying shares. I'm not buying options on this. I am buying shares long term. All right. Long term, not a forever stock for me. Long term means anywhere from 5 to 10 years or less. But it's not a forever stock for me. You guys know what my forever stocks are. Mostly it's in SPY, S&P 500 index, Apple, Chevron, and Boeing. Those are my forever stocks. But Intel is pretty compelling. Okay. So there's that. Energy is, we're in that oil spread, that USO spread. It's a pain. We were doing so well with our index spreads, and then I had to go just mess that all up with this oil trade. It could have been, it's very small, but mentally it would have been nice to just have victories only. But I guess that's not the case. We can't just win all the time. It is what it is. All right. So let's see where this goes. If we lose on the front month contract, now I'm talking about the front month. I'm not talking about December. So if we're just looking at the front month contract, if we lose that 86 zone, if we lose that, I'll probably just stop out. Honestly, I'll just stop out if it loses 86. It is what it is. It'll be a small loss. I have about 0.8% of my portfolio in this. It is what it is. Okay, it is what it is. What else? That, seems to be, what's on the news. Nothing else seems to pop out. We're still in OpEx. Natural gas is up still. If you look at European natural gas, the last time I checked, it was up. I had it here. It needs to reload. Trading economics needs to reload. There we go. The European prices, the reason why I bring up European prices is also too in the news. If you actually look at Germany, I believe the German economic minister came out and he said that there may be some industries that need to shut down in order for them to get through the winter. All right. And there's already some businesses that have been shut down for a few months now. And so that presents some issues. This is the electricity price. It's coming down from yesterday at least. At least the electricity prices are coming down. If we look at actual gas prices in Europe, they're up today. Okay, will it keep going up? Was this just a small pullback? We will see. If this keeps going up, I do think then the euro, all right, the euro will keep coming down. Okay, we've lost parity again, yet again. We have lost parity. All right. The reason why the euro had such a premium over the dollar was because Germany was the export machine of Europe. All right, and that justified a higher euro because of the trade surplus that they have. Well, if their industries close down and they stop exporting, then what? That justification goes away. All right, they start getting into more trade deficits. This is going to go down. All right, if this goes down, FEZ is going to go down. So that's going to be good for our puts. All right. So that is how that could affect our FEZ. All right. As far as other commodities are concerned, gold getting ever so closer to our buy level right here. This is like a supercharged institutional zone. Every time we have touched this for the past 2 years, we have seen institutional buying. 1, 2, 3, 4, boom. Huge institutional block orders in the futures market when it hits this level. Okay? I think it hits again and it'll pop. So again, I will buy when it gets to 1680. I'll go along with some call spreads, most likely. All right. That still hasn't changed. ZC, corn, my plan still stands. All right. I will, I will short when we get to that 750 zone. The chart that we're actually using is going to be ZCZ, which is the December contract. When the December contract gets to 750, I'm going to sell. All right. Or I will buy put spreads. I'll go short on corn via put spreads. I might buy put spreads on the actual futures contract, or I might use the CORN corn ETF. But that is my next play. I'm waiting for this zone to short. All right. As far as commodity news are concerned, like wheat and other stuff, there's really not much change from yesterday. So I will spare you from repeating myself. One thing I do want to mention though, TIP-TLT, it did gap up and it went kind of down again. So I mean, we're still above the breakout zone. If this keeps going up, we'll see. Now, every time we had this outside day down in TIP-TLT, it did come back up within about 5 to 7 sessions, and then it gets knocked down again. So will we see that same thing? 1, 2, 3, 4, 5, 6, 7. So, past patterns suggest that this could go up 2 more days and then get smacked down again. Will that happen again? We'll see. We'll see. All right. HYG still coming down. This is our liquidity signal. Although if it closes right here, that may look like an exhaustion signal, does it not? That could look an exhaustion signal. We'll see. In the end, it's all about that junk bonds AD line. As long as that AD line can't make new highs, liquidity is leaving the market. Okay. But keep a close eye on HYG because I think that's going to be very telling on what the next rally will look like. Will it be another bear market rally, or will this bull market actually have some legs? My long-term thesis is still such that, you know, I still believe that we are in a multi-year secular bear market. All right. Now, in between all of that bearishness, we might see mini bull markets. Okay. If you actually take a look at back in the 70s, all right, let me pull it back. If you actually look at back in the 70s, that was the case. We had inflation start in about 69 or so. All right. And that's where we had our, you know, first sell off. And we saw signs of inflation actually around 68. And so in 69, we had inflation come up, and, you know, we had our first bear market. Then look at this bear market rally, huge bear market rally. All right. Then we had 73, 74 with all the, you know, oil price spikes, the oil crisis and everything. That was here. That was here. Okay. So new lows, but guess what? 4 years later. All right. Then we get another rally, another bear market, another rally, another bear market, another rally, another bear market, all the way to 82. Okay. So I'm not saying that that's going to be the case. I'm not saying that this is going to be 10 years long. I think this is going to be like 5 or 6 years long, just because the market tends to be about 2 times faster than what it used to be. But, you know, if this serves as a model, you know, I do think that, you know, some of the bull market runs in this bear secular market could last a while, you know. But again, for that to happen, we need liquidity to increase. Without liquidity increasing, it's not going to last long. It's only going to last like a couple of weeks or a few weeks at the most. Okay. So that is something I'm closely watching and monitoring. Okay. Liquidity data. Here today are a high-low line. There are more lows than highs. That is accelerating to the downside. Our advanced decline line on the New York Stock Exchange also coming down. One of the indicators that I said, you know, not our biggest indicators, but still, I would think a pretty important one is the equal weighted S&P 500. The equal weighted S&P 500 has lost the 50-day moving average. And when that happens, generally we see increased selling just because there's so many stocks participating in the sell-off. Breadth is, you know, to the downside is increasing. More and more stocks are participating in the sell-off. All right. That usually means more pain is ahead. But again, we're in the biggest OpEx month that we've ever had. So, you know, it may not move down in a straight line. We may see a rally first and then going down. And again, my plan is when we get to that 4120, 4140 zone, I'm going to be re-entering those QQQ puts. Again, maybe this one 2 or 3 months out. 2 or 3 months out right here. Okay? And this time I'm going to stick to my plan. I'm not going to do it early like I did last time. I will not be making that mistake again. I learned from that last one. I will wait and be patient for my levels. Okay. Anything else you guys want to look at? Anything else? Any questions, comments, rude remarks? Oh, I always keep forgetting crypto. Let's go over crypto. Today, notional value still there. We actually saw, you know, we actually saw some transactions happening. Some more butterfly call spreads were being opened, and at the same time, we also saw some strangles getting opened. Let me see here. Is this it? Yeah, it is. Okay, so yeah, we saw those call butterfly spreads and strangles. Of course, you know, there's a lot of other trades out there as well, but for block trades, I think that was some of the biggest block trades that we saw, mostly on the call side. All right, let's see if we can draw any conclusions from the block trades. Let's see here. Let's see from net delta exposure. Still net delta exposure negative on the weeklies, September's, still positive in the December Marches. Okay, so that is the delta positioning. And as far as the block trades are concerned, I mean, the last time I checked, I didn't see anything, but you know, maybe something could have changed. Sell. What is this? Oh, we saw, oh, wow. Somebody selling the September 9th. Somebody sold sold a straddle for September 9th. Interesting. That's new. Buy. What is this? Put. Okay, so we see some put buying for December. I wonder if that was matched up with something else. 307.29, 307.29, 305.05. It doesn't look like it. It doesn't look there's, but you see here, wow, somebody's buying a lot of these 800 puts for December. Is that being paired with something? No, it's not. So okay, somebody's legging into puts for December, 800 puts. Ooh, interesting. Somebody's getting bearish. It could be somebody's getting bearish. I just want to see what the OI and stuff looks like for December. Volumes, yes, that's what I want to look at. December. Those are the quarterlies. 800 puts. 800. Wow, there we go. Right here. So we're seeing actually a lot of OI, open interest, here. So from 2,000 all the way down from 2,500. Wow. So some of them are really in the money. That's interesting. Wow. And so we have a lot of in the money puts, but now people are building put positions out the money. Once we get the Moab signal, the mother of all buy the dip signals, I mean, this could just rip really high, you know? That could be something. So, you know, again, when we get the mother of all buy the dip signals, you know, I'm going to be buying, you know, all those things we talked about, you know, Hut, Ford, you know, more PPC. Oh, PPC, I bought some at the end of day yesterday around 28.50. I'll check that afterwards. But yeah, but when we get that mother of all buy the dip signals, I'm definitely going to be buying those risk assets. PPC, again, I bought this yesterday with my long-term stock portfolio. I started nibbling at 28.5, and now we're at 27.66, of course, okay? Didn't get to sell any covered calls on this yet. However, if by OpX we do see a little bit of a upward, you know, let's say this goes up to about 28 or so, I'm going to sell some in the money covered calls on this, okay? Start making some income off of that. Ford still looking at the same levels, 1380. Hut still looking to increase my share positions at 165 and lower. All right, so nothing has changed on that. Still on the ES or S&P 500. Again, I'm going to short or buy some puts. I'm going to go long on puts, short on the actual S&P 500 at 4120, 4140 zone. And again, nothing has changed as far as my buying program. I'm going to be buying during that Moab signal. Again, high-low line, junk bonds AD line. That's what I'm basing my liquidity data off of. And again, we see that liquidity rushing into the market. Boom, Moab, mother of all buy the dip signals, we buy, okay? But you know, if we don't get a clear signal from that, still I will want to nibble some shares at 360 on SPY, and again I'll wait for some bigger buy levels at 340, and then again for the options, you know, I want to buy some leaps on actually the Russell. And again, I will not do that until I see the mother of all buy the dip signal. If any options, long positions, I'm not doing that unless I see the Moab. All right. Oh, speaking of options, long positions, I do have a lotto on SPY. I bought the right here. I bought this, the 408, 410 spread. Okay, I bought this. Lotto, small size, super small size. I think I bought it for like 34 cents a piece. Okay, super small lotto. Are they up right now? Oh, they're up right now. Not much, but okay, a little bit up. All right, we'll see. We'll see. We have in the money puts all the way up to 4,300 on the S&P 500. I don't think it's going to get up there. I think once we get over that 4,100, which is the delta neutral zone for S&P 500, we'll probably slow down and it'll probably reverse, especially if our liquidity signals are still turning down. Okay, so again, liquidity signal, if the market pops, but liquidity is still negative via our junk bonds AD line and our New York Stock Exchange high-low line, that's when we buy some puts. Okay, 3 months out, 2 or 3 months out, 3-to-1 reward to risk ratio. I'll let you guys know what strikes I pick then. Okay. Anything else? Anything else you guys want to look over? Any stocks? Any charts? Any comments? Questions, rude remarks? All right, then. In that case, that concludes High Noon Highlights. It was a little bit shorter today. Again, just because, we got rid of some of our positions and now we're just holding tight. All right, we're trying to anticipate the next few moves in the market. Okay, we're trying to anticipate what's going to happen. So let's be patient for our levels. Let's not overtrade. When we overtrade, that's when we lose money. Okay, the real pros wait for price to come to them. All right, let's be patient. This is a wild market. We have Labor Day coming up. After Labor Day, I do think that we are going to see some volume re-entering the market then, and perhaps then our levels will be a lot clearer. And I think market movement, there'll be less overshooting happening on the charts when the pros get back from their vacations. Okay, guys. Well, in that case, stay safe. Don't overtrade. Keep things simple. Wait for our levels. Have a wonderful day. Sometime today or tomorrow, I'm going to be doing that Theta Thunder episode. I just don't know exactly what time it's going to be. I'm going to make an announcement. I'll make the recording. I'll put it up on YouTube. But it's happening either sometime tonight or tomorrow. Okay? So I'll let you guys know when that happens. Have a wonderful day, guys.